and let's talk about what's happening with hiring. What are the hiring trends like, especially when it comes to the IT sector? Who better than Hitesh Oberoi, MD and CEO at InfoEdge, joining in to talk about exactly that. Hitesh, hi, morning. Good to have you on the show. And let's start off with IT, fresh in our minds from TCS's management commentary. Tell me, what is your observation like? Is there any sign of a recovery? Do you think hiring within IT is still patchy, or is there panic now because of tariffs?
Well, we just released our billing numbers for Q4, and we are happy because our billing growth has been improving quarter on quarter. So we started the year with 7% billing growth in Q1, and we've closed the year in Naukri with 18.5% billing growth over the previous year. So on the whole, hiring seems to be reasonably sort of solid. As far as IT companies are concerned, I think GCCs are still hiring. IT hiring has been modest. So all the companies are at least now doing replacement hiring. They've gotten rid of the bench they had built over time. Their attrition rates are back to pre-COVID levels, and they're replacing the people who are leaving. And it's very company specific. Like mid-size IT companies seem to be slightly more aggressive on the hiring front than the bigger sort of players out there. But on the whole, it's a modest hiring market. I don't think there is any panic which has set in. There has been a lot of talk about AI affecting jobs and so on and so forth. But our sense is that AI will also create a lot of new jobs. So let's see how it sort of plays out over time. Of course, what's happening in the US right now, I mean, that is we are in for some uncertain times. But hopefully things will settle down sooner than we think.
Hitesh bhai, good morning. Long time.
Yes, it's long time.
What we are discussing today are numbers for the quarter gone by. The problem has happened after 2nd of April.
Yes.
So while the quarter gone by numbers look great, for coming quarters, will they look great is the problem.
Very hard to say. Such an uncertain market, given what's happening in the US, and things change every day, and it's very hard to predict what's going to happen going forward, and what impact will that have on India. In the past, like I've always said, whenever things have slowed down in the US, it's not necessarily bad for IT companies, especially especially for GCCs, because India's part of the solution. Companies look to cut costs in difficult times, and outsourcing jobs to India is one way to do that. So it's very hard to say how things will play out going forward. Certainly, what I can say is that companies have gotten rid of their benches. See, what we saw post-COVID was a surge in hiring because of digitization, and that led to companies over-hiring. And for a while, hiring slowed down because the utilization rates went down. But now they're all back to where they were pre-COVID. So unless demand takes a hit, hiring should look up.
So one is IT. Second is the real economy, which is growth, capex, MNCs. What about MNCs specifically? I mean, we understand that MNCs are delaying decision making. Could that start impacting not the IT business, but other verticals also, especially if those businesses are global in nature?
So, there are two parts of this whole MNC thing. One is MNCs who sort of sell in India and hire for their local business in India. And then the other piece is the global capability centers, which have been set up by MNCs over time. I think global capability centers, there could be some ups and downs, but the long-term trend is clear that those numbers will grow. More and more companies are setting up shop here, and companies which you would not have thought of, right? Even mid-sized companies, even small companies, everybody wants to have a few hundred people at least on the ground, and the bigger ones, in fact, have 20% of their global workforce operating out of India. India is never more than 2, 3, 4% of sales for any MNC. But in the case of many companies, 20% of their global workforce is based out of India. So that's what actually perhaps every company can aspire for over time, and which is why we continue to be bullish on GCCs. As far as the local business is concerned, that will depend on how the local economy moves. And the local economy is pretty solid right now. It's not as if things are slowing down on the ground on the non-IT side. I mean, we are seeing a reasonable sort of growth there. Barring some sectors like maybe consumer companies, consumer FMCG companies, almost all sectors are sort of hiring.
Good morning. This is Shrishti also joining in. Though IT is much of a global sector, let's get back home and talk about the domestically linked real estate pack, because help us understand how is 99 acres doing, what sort of a demand trends are shaping up there, and which segments, or rather which geographies are you finding the demand to be robust?
So in 99 acres also, we've seen our growth move up sequentially quarter on quarter from with 13-14% at the beginning of the year to 21% in the last quarter. And if I look at supply on the platform, because if I look at demand on the platform in Q4, that was up more than 25%. Now the thing with problem with real estate is that real estate is about micro markets, and certain markets are very, very sort of highly priced right now. For example, Noida and Gurgaon, prices have gone through the roof in the last couple of years, have almost doubled in these cities. And, and therefore they have become very premium sort of markets. Even the new launches are at much higher prices than what property prices used to be in these geographies. And I suspect, demand here could take a hit for some time till prices sort of stabilize. The rest of the country, in the south, for example, in Chennai, Hyderabad, Pune, Bangalore, prices are still modest. They are much lower than the kind of prices we are used to in South Bombay and now in Noida and Gurgaon and South Delhi. So I suspect demand for real estate in these markets and also in the rest of the country, the cities outside the top 6-8 cities will continue to be buoyant. But in markets like Gurgaon and Noida, unless the developers keep prices in check, it could take a hit going forward.
Okay. You are a play on economy, which is, if economy does well, InfoEdge does well. Economy is expected to do better if I look at the domestic economy. So what could be the delta? Let's say last year the economic growth was 6.5. If we go back to 7.5, or even if we stay at 6.5, can I say that there is going to be at least 15% uptick in business?
We are a play on the economy, but we also play on a few other things. You're absolutely right. The economy is big for us, and every 1% incremental growth in the economy can add 4-5% to our growth very easily. But more importantly, we're also, our execution also matters, and I think we have, been executing better with every passing quarter. We are investing heavily in AI, and we are deploying AI very aggressively across all our platforms, and that is going to make a difference going forward. We are also growing much faster than the market in the newer verticals we've set up over time, which are perhaps, even outside 99 acres and Jeevan Saathi and Shiksha, which are growing at higher than market rates. The newer verticals we've set up within jobs, like the IM jobs business we have, or like the Gulf business we have in the Middle East, or some of the new AI products that we're building, or even the blue collar platform, which we've now started monetizing, which is very tiny. These are also penetration opportunities, because we are not fully penetrated. And so these parts of our businesses should also grow much faster than the economy. Yes, the core Naukri business, I guess, is much more indexed to the economy than the other parts of InfoEdge.
Do you see opportunities which are getting created in any of the new sectors? For example, today we are talking about manufacturing coming to India. We are talking about a renaissance in this entire so-called defense and manufacturing and embedded AI space. Do you see there are a lot of jobs which potentially did not exist 3 years ago? They will be added up, and that could give a delta to you?
Right, there are sort of like, for example, even the whole blue collar space, the number of people who are net savvy and who are going to be getting, who are going to become gig workers, or work in some of these new setups, that number is growing massively. And if e-commerce and quick commerce and some of these other platforms continue to grow at 25-30% per annum, that workforce will grow massively over time. Manufacturing, there are green shoots in some segments. I'm not very sure whether the kind of manufacturing jobs we'll end up creating will go through Naukri. Only time will tell, because yes, at the managerial level and above, those jobs will come to us. But I'm not sure about the workers who sort of work in these manufacturing setups, whether those jobs will come through us. They may go through Job Hai, but not Naukri. On infrastructure, we continue to be bullish, and there was a point in time 15 years ago when sectors like engineering, infrastructure, energy, all these real estate, etc., used to be a big part of our business. In fact, they were 25-30% of our revenue at one point in time. And that number went to 15-16% over the next 10-12 years because there was hardly any investment in infrastructure in India. But that infrastructure investment has come back. And I expect jobs in these sectors to grow over time. And we'll get our fair share, of those jobs. But on the whole, India still continues to be a services play more than a manufacturing play from a job creation standpoint.
Well, fingers crossed on how the US discretionary spends actually pan out, because a whole lot is going to depend on that. But Hitesh, so good to have you on the show today and get in your thoughts.
Thank you. Thank you.
If you like this video, then like, share and subscribe to ET Now.